Hey, it's Michael Saul, but everybody calls me Tiny. This video is the market is coiled ahead of Irma, plus two stocks to watch. This is stock market analysis for the week of September 11th, 2017. Recording this video 1:30 in the morning on Saturday because I'm just watching what's going on with the hurricane. So first and foremost, if you are in the hurricane's path or your loved ones or whatever, just having good thoughts for you. It's absolutely terrible. I have a lot of friends who decided to stick around. They were not going to go on the parking lot known as the interstates. However, it looks like the eye of the storm is coming right over Florida. It could be really terrible. So just hope anybody who's in the path is safe and has enough food and water in case the power goes out for a little bit. Also, still recovering from Hurricane Harvey, and there was the earthquake in Mexico as well. I just recently read 60 dead there, so a lot of stuff going on outside of the markets, outside of the political nonsense, and it's just devastation going on around the world. And I just saw that there are actually 3 hurricanes setting up besides Irma and then plus 2. So, but again, and like I said, I've been watching the coverage, and it's just re-strengthened to a Category 5. So again, it's really dangerous out there. So stay safe. Also, we have Monday is the anniversary of the September 11th cowardly attacks by those scumbags that decided to fly planes into buildings, and maybe overshadowed with assessing all the damage that's going to be done. But it's a day I will never forget, and I don't think anybody across the world actually should forget it, but especially here in the States. So that is something that a lot of times you'll hear me try to stay away from politics and all that, and it has nothing to do with politics. But to me, that day hits home, changed my life forever, and I got off easy. It changed a lot of people I know, their families' lives, a lot worse than mine. So anyway, that's on Monday. I really can't believe it's not a national holiday, but again, the market is open. And I don't know how much activity we're going to get with, like I said, the hurricane hopefully will have calmed down by then as it continues moving north. But assessing the damage and everything, and plus also the memorial services, the remembrance for 9/11. It could be for a light volume day on Monday, but always be ready, especially with the market coiled up like this. Before I forget, like I did last week's video, for intra-week updates from me, go to www.attackthemarkets.com. Put in your first name and best email address. Put in your first name and best email address and hit the join the list button. Then go to the email you used to sign up and look for an email from me. Click the link inside so you confirm that you do want to receive information from me. You have to do that because there are a lot of bots. I don't know why anybody programs these bots to go around and fill out these forms. But anyway, so you'll have to confirm, otherwise you won't be added to the list. All right, so let's take a look at the market. Like the title said, coiled up here. And we're right under the highs. So the suggested move based on the position and the pattern, the trend, okay, position right under the highs, the trend is up. And the pattern here, the coil, a lot of times you'll see a coil before the break. So I'm still leaning to the upside here. However, the coil has to bring me to a neutral stance and wait for a move either way from here. So either it breaks out and goes, or it breaks down and corrects a bit. You have this low down here, 243, and then you have this low at just under 242, and then the low down here at 240.5. If it does break to the upside, I am expecting it to get to 250. Could it just dribble out of here? Yes, it could. It could continue. We may have to fan out the lines a little bit, whatever it is. So, but as of right now, this is what the pattern looks like. So again, it may break and it may not go far. The coil didn't work. Well, maybe it's continuing to work itself out. So that's what we have to watch here. That's the S&P 500. Dow looks kind of similar, maybe not as tight as the S&P. The NASDAQ also with a coil here. The Russell with a coil, but of course in a different position. It's not up at the highs. The Russell is lagging. Again, it's not a short signal lagging. It's just not as strong. And the mid-caps have taken over on the ultra short term, the very short term, as the weakest of the five. Again, not a short signal, but just lagging. Okay, the mid-caps. So it looks like the NASDAQ is the strongest, followed by the S&P. All right, let's take a look at some sectors. Semiconductors. I always do that. Always do it. Okay, semiconductors also coiled up. Again, not just off the highs, but did come out of whatever coil this was. If we can do this, this. Okay, did come up and then now it's coiled up again. See if it moves, gets going. Look at some of those stocks. Clad Tanker trying to make a move. We highlighted this a few weeks ago. It's still trying to get higher. It's not in a rush for now. Here's Intel, a little sloppy. NVIDIA popped out, but then it came back. Watch the 50-day moving average, see if that holds. That's the yellow moving average. Banks. So the banks took a little tumble here. They could not hold the 200-day moving average back to this previous level where it broke from. Remember, it didn't get to new highs from this break. So it does have a lower high in here, but to me, yeah, it's below the moving averages. It's below the 200-day moving average, but look how sharp that 200-day was moving. So, yeah, I'm not just completely dismissing it, but it's not like it was a, way ahead and way away from it, and it came back. I mean, it's a pretty sharp trend, pretty sharp angle there. So I want to watch the lows down here at 87.90. And then I want to watch 86 to see how those levels do. See Bank of America below the 200-day moving average for the first time in a while. Here's JP Morgan right at the 200-day moving average. Here's Citigroup. I mean, this looks like a potential in the spirit of a head and shoulders, a topping pattern. See if it gets, first you got a gap here, and then you got the 200-day moving average. Okay, Northern Trust. Still in its pattern there, still in its range, right around the 200-day moving average. Here's the broker-dealer index, came to the 200-day and held it. Here's Goldman. Again, still in this same slop. Yes, it's below the moving averages, but it's not having a dynamic move away from it. Definitely something to pay attention to. Morgan right at the 200-day moving average. So let's see what the financials do. Let's see if the financials hold, or if this break is more than just, hey, it's more than just, I'm sorry, it's a little late. I probably should have waited till the morning to do this. Well, I guess it is the morning. Anyway, see if this is just a retest of the low end of the range, or if it's going to go more. All right. How about the biotechs? I always like to look at the biotechs. Coiled up here, right? They had the nice pop up. Now they have the coil here, so the biotechs do look higher, but again, wait for the entry here. Okay, all the coil tells us, if I could get my drawing tools, that would be nice. Okay, hang on one second. Here we go. It's nice to have them ready when you're going to start doing drawing. Okay, so there's a tight coil here for the biotechs. We look at a Gilead. Gilead has what I call the New York salute, right? The nice inverted hammer. So this may be due for a small pullback here. Maybe it just goes sideways. And Biogen is similar. How about this Labu? Nice coil up here right at 80. See if this can pop. I mean, if biotechs are going to continue to go, you can watch this Labu to try to get to 100 here. Be a nice move for that one. All right, let's look at Caterpillar. Nice and strong, still hanging strong. Here's John Deere. All right, never got below its 200-day, coiled up, kind of poked through it, but it's not in a big rush to get moving. Let's see what we got here and here. Let's redo the lines a little bit. Okay. Not in a rush, and you got the 20 EMA. Look at some of the glamour stocks. Amazon sitting here in a more sloppy sideways pattern than any trend, or directional trend at least. There's the 50-day moving average above it. Here's Apple. So Apple, we drew the wedge in last week. It looks like it broke down from it. Watch the 50-day moving average for a test, but a lot of value here, a lot of support here. Okay, it built a lot of value here, so you got to watch that as potential support. How about Alphabet? Just sideways, no real directional trend there. The Facebook, which was, when I talked about this, I said this had the nicest looking flag pattern. It did pop to the upside, but it didn't get to a new high here. So watch this, see if it stalls out up here. What about Netflix? Yeah, nothing there. What about Tesla? Still forming what I think is going to be a triangle here. So let's see what happens with that. Gold was the focus last week, and it is continuing to rock and roll here. It's moving higher. Okay, again, a little bit extended. It was extended last week, but it's even more extended now. I'd wait for a pullback or a pause here to watch. Oil had a nasty day on Friday, down nearly 3% using USO here. I still think it gets to these 2016 lows, but with the hurricanes coming, especially with the big one now, of course, and the other two brewing, yeah, I mean, oil may ramp on it, gas shortages and everything like that. So just watch it. I don't really see a pattern for now. And here's bonds. Wow, bonds highest close on Thursday in all year, and going all the way back here to November of 16. So yeah, like I've been saying in the video, a lot of people have been talking about a bond rally. I have not seen it, so I'm not saying, oh, I knew this was coming. I didn't see this, because to me it looked like it could be forming a cup and handle, but didn't really get a break. This could be the break, but let's see if it holds here, maybe goes a little sideways and then extends, or if it just kind of dips back down into this. Two stocks to watch. The first one is Foot Locker, and it is a potential short. As always, just like with the longs, you want to wait for your entry. Okay, but you have the big gap down. That's a sharp impulse. See if this goes, and see if it can trade down to 30. And then on the other side, there's TK Corp. It's oil and gas integrated. And it's not really a flag, because overall it is in a range, but it's a nice little channel here. And if it does confirm, I want to see if this can get up to these highs up here, just shy of $12, which would be a nice move. So once again, if you're in the path of Irma, stay safe. And don't forget, Monday, like I said, is the remembrance of the 9/11 cowardly attack. So, you not celebrate it, but you memorialize it any way you want to. I know it's always a heavy day for me, so whatever. Any questions? Tiny@attackthemarkets.com. Sign up for the email list if you want intra-week updates. Give this video a thumbs up so it can move up higher in the rankings, and let's see what happens with the market early in the week. Any questions, just give me an email, and I will talk to you either via the intra-week email or in next week's video.